We're almost there. I'm gonna press the go live. This live video is starting. Excellent. All right. I think we are good to go. It is. Now the real question is going to be if Facebook notifies, and that's what I'm interested to know. It says we're live. Oh yeah. All right. Welcome. Today is February 24th. It's Friday. TGIF. It's been a long week. It's 8:30 a.m. Eastern. Welcome, Josh. I'm Ted to the Crypto Flight Path. How are you today, sir?
Good morning, my brother in crypto. How's it going?
Good. I'm just watching this here unminted block number 778111 about to be minted on the Bitcoin blockchain. And I think it's probably appropriate given what we want to talk about today. So I'll tee us up and talk a little, or just describe what I think we'll talk about. So we'll talk. I think we'll kick it off talking a little bit about buying Bitcoin and holding it, and then transition into what we'll call for this discussion altcoin strategies. There's a couple of things to unpack there, but in a nutshell, how to use altcoins to supplement or buffer or complement your crypto portfolio in a manner of speaking, ways to maybe think of altcoins as longer term investments, like in a venture context. And Josh is the venture dude, so he'll talk about the venture aspect or long term investing, perhaps, or longer term investing is one way to put that. Also, maybe in a shorter term context, talk about how to use altcoins to either generate income that you can use to buy more Bitcoin or put to work in some other fashion. And then last but not least, we'll round it out talking a little bit about trading, ways to approach trading if you're new, things to consider, and hopefully it'll be of use. And with that, I will let's kick the discussion off talking a little bit about Bitcoin, how to buy it, and then how to hold it.
Yeah, sounds good.
All right. So if you're really new and you've heard people talk about, oh, have you heard about Bitcoin? That's this great thing, and you're like, well, yeah, I've heard about it, but I don't know what to do, or I'm afraid, or I'm like all I know is that Bitcoin is used by scammers and money launderers. If you listen to Elizabeth Warren talk, uh, you'll have some trouble like getting your mind around like what Bitcoin actually is. But where I'm trying to guide us at the first part of this discussion is that if you've never purchased Bitcoin, there's a couple things to understand about how you can do that. Let's assume for this first example, as we kind of find our path here this morning, is to figure out or talk about like if you're in the United States or you're in Canada or you're in some other United States or you're in Canada or you're in some other where you have a bank account, you have like a debit or a credit card, you have income, or you're employed in some way, or you run a business, you're able to earn a living, and then you've got some excess capital in your quote unquote bank account, whatever that looks like for you wherever you are. And then so Josh, what I'm trying to tee up here, maybe you can lead us off on this, is like what do you need to have in place first before we tackle and start talking about what it means to go to a place, meaning an exchange, and create an account, log in, get set up, and then actually make a Bitcoin purchase.
Yeah, so essentially, when you kind of take a step back here, there's basically three strategies that I know of and that I implement to. I guess there's four, but we can talk about the fourth later. The first strategy is to buy and hold Bitcoin. Okay, and this is what I recommend most people do to get started. This is the safest way to enter the system and learn about it and understand it. And so, strategy one will say is buying Bitcoin. So, to buy Bitcoin, what you're going to need is you're going to need your ID ready, you're going to need your banking information ready, you're going to go to an exchange like Kraken or Coinbase, and you're going to provide your KYC information, which is know your customer information. All these exchanges need it. It's required by law. You'll enter your information, and then you'll have an account set up on the exchange where you can buy or sell Bitcoin. Okay, that's the practical kind of step-by-step way to get Bitcoin. But kind of what we want to talk about today is like the strategies behind it, right? And so if strategy one in your Bitcoin portfolio, crypto portfolio, is to buy and hold Bitcoin, how does that look? What do you do? All right, so there's a couple strategies there, and the one that is very easy to explain and understand, and you can do this with stocks as well, but it's called dollar cost averaging. Okay, and so what I tell people that have never bought Bitcoin before is like, look, learn how to sign up for an exchange, learn how to download a wallet, okay, and then go buy $50 of Bitcoin and watch it for a week or two. And the price goes up 10%, you have $22, and when it goes down 10%, you'll have $18, and the media will tell you the world's ending, and you'll look at your wallet and you'll be like, oh, that's not a big deal. I've still got $18 worth of Bitcoin, right? But dollar cost averaging is just picking a date. Like I do it every Friday, and I have done it for years. I'll buy X dollars of Bitcoin, and I don't care what the price is, because over time that allows me to get kind of dollar cost average into a position of Bitcoin. Now, there's other ways to look at this too, and you've got to be cognizant of what your investment strategy is. Like, what are you trying to accomplish? Okay, so that's something you have to think about in any investment. And so with Bitcoin, I don't there's a lot of people that'll say 1 to 5%. I don't know what your situation is. I don't know if you're 23 years old and have, $2 million, or you're 50 and have $20,000. I don't know that, so it's hard for me to say what anybody should do. There are some strategies, like if you take, for instance, people will allocate, 5% of their portfolio to gold. I think that's a great idea, for Bitcoin, for people to get started. This isn't something that before you learn and understand that you should jump in and go absolutely crazy with. Okay. And so what I do personally is in my investment portfolio, my crypto portfolio, it's X% of my investment portfolio. And for me, it's a very high number, right? I've been doing this for 6 years. I believe in the industry. I would say I am 90% into Bitcoin and crypto. Of that 90%, 80% of that to 85% is a Bitcoin position that I bought and accumulated over 6 years that I never plan on selling. Okay. If Bitcoin gets to $250,000, I'll sell some of it to recover my cost and, book a profit. At that point, I own X amount of Bitcoin for free, and I am happy to continue to accumulate if the price goes lower. That's a strategy that I use. The other 15% I use to speculate on cryptos like Ethereum, Solana, other cryptocurrencies, altcoins. But for a Bitcoin buy and hold strategy, I would say that's strategy one, okay, is to forget about everything else, buy and hold Bitcoin for the long term. You have anything to add there, Ted?
I want to emphasize some things. There were some really good points that I want to revisit. This idea of taking a look at what you can reasonably afford from without putting yourself into or creating the circumstance or creating a situation where you feel you're losing sleep about how much money you're investing. And I would encourage anyone who's watching to think or maybe hop on Google and talk hop on Google and search for beginner investment strategies, and maybe take a moment and look at like a traditional investment portfolio mix might look like. But use that as a mechanism to think, if I were gonna approach a traditional finance, I mean like stocks and bonds, which is not what we're going to talk about today. But if I were going to approach putting money to work or investing money, this is what it might look like in terms of allocations. Just looking at like percentages, like 10% of this, 40% of that, some other percentage of some other mixture of things. Not getting too down in the weeds of what those things are, but really what I'm trying to like funnel back down to is that given your current the current amount of financial or capital firepower that you have available to you, whether it's $10 in a week or $1,000 in a month or $100,000 in a quarter or something like that. It's more about understanding how much you are going to be able to on a consistent, meaning regular basis, or some cadence like weekly, daily, or monthly or quarterly. How much can you put aside? Warren Buffett. There's a good. I mean, I don't know if it's good or bad. It is. Warren Buffett has been quoted to say something loosely like you should. When you earn your income, you should spend or save first and then spend what is left after saving, instead of paying your bills and buying some stuff and then looking at how much you have left over. Not saying you have to do that. I mean, goodness gracious, I'm guilty of doing exactly the opposite of what Warren Buffett has recommended many times in my life, where I didn't I didn't put aside some percentage of my income first, then pay my bills, and then had take what was left over and do things like go out to eat or buy new clothes, or just stress spend on Amazon, which I know a lot of us are. I'm guilty of that. So anyway, what I'm trying to communicate here is simply that if you take a real hard look at your financial picture, and let's say you can only reasonably afford $10 in a week. Doesn't matter. Let's go with that example to drive home the point you're illustrating, is that regularity and frequency together are what build a portfolio of something that in a year, 5 or 10 years time becomes something quite substantial and can create the conditions create a situation in the future where you have this particular asset or a portfolio of assets that are able to enhance your life and make it better financially speaking, where maybe you're able to retire or choose a different career path, that you're not necessarily working in a particular career sector or a sector or industry where it's more lucrative but it's more stressful. I mean, we can talk until the cows come home about how stressful jobs can be, etc. But if only I had some other way to make money or be financially secure. What I'm trying to drill down and hone in on here is that what you do today, as simple as $10, let's say every Friday, leveraging Josh's excellent example. If you put away, and I say put away, I mean purchase $10 at whatever the market price is of Bitcoin every Friday for, let's say you did that for 3 years, that's 52 weeks times 3. You'll be surprised at what you're able to achieve in terms of building a position in an asset that has the right characteristics to be able to set you up and be very helpful to you in your life in the future. So just in summary, take a moment, figure out how much money you can really realistically invest today that doesn't cause you any pain, doesn't keep you up at night, give you anxiety, make you sweat, and start doing it. And the way to do that, the first thing to do is to just get set up on an exchange like Kraken. That's a great example. There are many others like Coinbase. Now, take opinions on which exchange is better aside for a moment. These are just these are the means to the end of how do I personally acquire Bitcoin and put it in my portfolio. And if I'm starting out, or if I want to continue to develop my portfolio, I want to add this. I want to add another. There's another place I want to buy Bitcoin. You can certainly do that. You don't have to stick with one exchange. You can buy on more than one. There's hardly any rules, but the most important thing to remember is just do what you can today, and try to expand your time horizon a little bit and think about what 3 years or 5 years. I know it's very challenging sometimes. I'm the worst one in my younger years of being able to look past the end of the week, much less, 3 months or 5 years into the future. It was just really, really difficult for me. And hey, we're all different and we all look at the world differently. But I think between what Josh is sharing, which I thought was really good, with really uh, sound strategy, and then factoring in what you're able to accomplish today, and then looking at and being able to take stock every so often. Just, I don't know, use a Google sheet or a spreadsheet and just keep every week, just log the date, how much you bought, the purchase price at the time, and then you'll start to see interesting things happen as Bitcoin's price changes and moves up and comes down, and the market for Bitcoin develops globally. I think that's a really interesting facet here, is that this is a global asset, and that, today we have, I don't know, what, 100 and some million users of Bitcoin, or people that have Bitcoin wallets, which is a very small number considering the number of human beings that walk the face of the earth today. And given the potential for, let's say, a 10x increase in adoption, that puts us over 1 billion people all honed in on acquiring more Bitcoin, other altcoins, being globally. I think this is a really interesting and exciting time uh, for anyone. Even if you're brand new today, you're in a really interesting position to be able to participate and then benefit from participating in the future. So,
Yeah, we can point you in the right direction for this research, right? And so you can look at that for yourself and where we are on the adoption curve. I think all those things are important to consider because, again, taking a 30,000 foot view, why in the world are we doing this? Why is anybody doing this? Why are all these crazy people talking about Bitcoin and crypto? Why should you care? Okay, so the reason you should care is because over a 5 year period, Bitcoin has what's called a compounding annual growth rate around 150%. Okay. So if you look at a Bitcoin purchase compounded annually over 5 years, the average return is 150%. I don't know where else in the world you can get any sort of return like that. You can't get it in the stock market, right? And so the reason you look at this and you say, I'm going to allocate a small position of my portfolio to Bitcoin investing over time is because of the compound annual growth rate. And that happens because there's a okay, and every 4 years, the supply that's released into the market gets cut in half. And these are all things we'll go over, but essentially, the inflation rate of Bitcoin continues to drop, okay, and will continue to drop every 4 years for the next 100 years until 2144, until the last Bitcoin is mined, okay? So people, as long as human beings are one greedy, which we all are. You can admit it, you can say you are, or you're not. You either look at the devil in the face or don't, ignore him. He's there regardless, right? So as long as human beings continue to be greedy, which we will be, I don't think that this is going to be something that goes away. Okay. So that's why we're doing this. And let's also be honest about something. We're doing this because we anticipate the price to go up, right? Nobody's in this and buying Bitcoin solely on the fact that they want to take dollars and lose them. Okay. So I think that's an important thing to remember because you'll hear a
mhm.
lot of people talk about some of the aspects of Bitcoin, which are very, very important and which I believe in very, very much. But the reason we're doing this is to make, US dollars, or alternatively, not necessarily to make US dollars, to preserve our purchasing power into the future. Okay. So, we'll talk a lot about why that's important. But what you want to be sure of is that, we say in Bitcoin all the time, one Bitcoin equals one Bitcoin. And so when you get started, you don't have to buy a full Bitcoin. When you can buy $10 worth of Bitcoin, you can buy $100 worth of Bitcoin. Don't be intimidated by the fact that Bitcoin's trading at $23,000. I mean, that doesn't mean you have to spend $23,000 to get started. You can buy a fraction of a Bitcoin. It's called a Satoshi, and it's just a divisible unit of Bitcoin. But that's how you get started, and we call that stacking Sats. So every Friday I stack Sats. Right? I'll take X dollars and I'll buy X amount of Bitcoin. And when you look back over a 5 to 6 year period, you go, oh my God, that's what that return on that investment of $300 is what? And so that's the thing you have to remember, that, people in crypto and Bitcoin, this isn't a short-term game, right? This is a long-term game. Like my favorite saying in crypto is this: getting my get rich quick plan is taking an awful long time, right?
Yeah.
So, but I think those are all important things to remember with your Bitcoin strategy. And we can get into like this in more detail and give you graphs and charts and stuff to help you with that. But the main thing we want to articulate is strategy one is buying and holding Bitcoin. And you can obviously lump some in too if you've got the means, and you say, okay, I've got 100 grand invested in the stock market and I want to buy 5% of my portfolio in Bitcoin, or 10 or 20 or whatever. You can lump some in. And actually, there are studies that show that done at the right time, it's a much better strategy. Okay. So don't take, dollar cost averaging is the only way, right? If you want to learn the market and, try to time this thing, good luck, right? Not all of us are trying. We don't seem to figure it quite out, but there are a bunch of ways to do that. So we just wanted to prime you with kind of the first strategy, and it is okay to just buy and hold Bitcoin. All right, that's what I think most people should start with. Truthfully, I think most people should start with buying some Bitcoin. Forget learning about it. To start, buy $10 worth and then learn about it, because you're going to be real interested once you got it. It sounds silly, right? $10 is not a lot of money, but if you get $10 on a Bitcoin wallet, you're going to all of a sudden wonder how the hell that thing works, right? And so once you open up that rabbit hole, it's hard to not go down it. And so we want to be here to kind of point you in the right direction and give you the resources to learn correctly about where kind of point you in the right direction on what resources can help you get there the fastest and without any kind of hiccups along the way.
No, I appreciate you sharing that, and I think interesting to look at Kraken's website when they in this is on the front page, so it's not this is not some like obtuse or obscure information that's buried deep within the 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 rabbit hole here is what I'm trying to say is that buying $10, like what I'm trying to communicate is that your point is that you don't need to spend the current price of like whatever the current price is. It's $23,756 according to this Bitcoin mempool visualization thing, which we can talk about in detail at a later time. But what I'm trying to communicate here is that you can simply go set up an account on an exchange like Kraken or Coinbase or any of the others that you trust, and you can put $10 into the asset, in this case Bitcoin or Ethereum or any of the other crypto assets that you're interested in. Then you can just buy $10 worth of it. You don't have to buy a whole Bitcoin. It's broken. Each Bitcoin is broken down into 100 million little pieces. And the good news is that you can get started in many cases, depending on where you're going. Sometimes you don't even need $10. You can buy $1 worth of Sats and start your journey there. So I think the thing we're trying to help people understand is that it's not nearly as difficult or terrifying to get started. In the world, in this world, there are reputable exchanges like Kraken and Coinbase, many others that are regulated entities, meaning they know the laws in the countries that they operate in. For example, in the United States, if you're going to operate an exchange in the United States, then there are certain rules that you have to abide by and certain consumer protections that have to be in place. So you can take action and be reasonably assured that there are some consumer protections in place. Some opinions of regulation are very strong to one end of the spectrum. Some are just as strong on the other side. Forgetting about opinions on regulation is that, for example, in the United States, if you want to operate here, you gotta obey the law. So that's all meant to encourage and help anyone who's new and sitting on the sidelines and is just unsure, to help get over that initial hump to get in the game. And really the thing that I think you articulated well is that the way to really experience what it means to participate in this ecosystem is to have some skin in the game by making a purchase and then knowing what it feels like to actually own it, because that Bitcoin is yours once you pay for it. Just like if you go to the milks or you go to the you go to the grocery store, you buy a gallon of milk. That's your milk, and you can do whatever you want with it at that point. But that's really what I wanted to like emphasize, is how simple it is, and how you can. So imagine. So another way to make this example, if you go to I'll use the same milk analogy. Buy a half of one of those gallons of milk, you have to look on the shelf to see if there's another unit, like a half gallon for sale. But assume for a second they only sold whole gallons of milk in this particular store. Then you couldn't just say, well, if the milk is $5, I'll give you $2.50 if you pour some into pour a half of that into another container and I'll buy that. They would say, no, you either buy a whole gallon of milk or you don't buy any milk. That's not the case here in the crypto universe, is that each of these instruments, like Bitcoin, for example, you look at the whole and then you decide how much of one do I want to buy, and if it's only $10 worth, congratulations, you can do that. So anyway, I don't want to harp too long on this particular topic, but I think it's pretty clear that the path to getting onboarded is pretty easy, and in many parts of the world, it's very, very easy.
Yep. Nope. I think that's good. I think, yeah, so strategy one, buy and hold Bitcoin. There's a couple exchanges you can do it on. I would buy and hold Bitcoin. I would, first step is buy $10, figure out how to get it off the exchange onto a wallet. But yeah, that's strategy one, and three strategies that, you can look at to start and build out your Bitcoin and crypto portfolio. Strategy two is something that, uh, I would figure out, first buying and holding Bitcoin. And then strategy two is something that I've done for, many years to supplement the Bitcoin holdings. And there's different reasons behind it. But strategy two would be, in your investment portfolio, you have an allocation, whatever allocation you have dedicated to Bitcoin. A certain percentage of that is Bitcoin, okay, and then the other percentage is allocated to speculating on different altcoins. And by different altcoins, I mean different cryptos, okay? So there's Bitcoin, which is a proof of work asset, which is a clear winner. And so with this strategy, what I do is any money that's ever taken to Bitcoin never leaves Bitcoin. All right. I won't trade Bitcoin for other cryptos. If I make money with other cryptos and buy Bitcoin, it stays in Bitcoin. So the golden rule with this strategy number two, is that any money that I put in Bitcoin stays in Bitcoin and never leaves Bitcoin. Okay. So any new dollars that I want to enter for other cryptos, I have to either go out and earn or use, an investment bucket that I've created with cash from other altcoin positions. Okay. So why do we do this? Why don't we just buy Bitcoin and hold it forever? Well, because of what's happened with the Bitcoin halving cycle, which happens every 4 years. When the amount of Bitcoin released into the system gets cut in half by 50%, right? The altcoin market has developed kind of a pattern around that. Okay. And so all these alternative currencies like Ethereum, Solana, Chainlink, some of the Cosmos, these are all different experiments in the crypto world. And I want to stress this too, because I think this is an important point that people need to understand. When you invest in this stuff, you're investing in experiments. And these are experiments that may or may not work. These are extremely high risk. It's a whole new world. It's very exciting. There's a lot of potential to, make money on these, but you have to understand what you're doing, right? And what you're doing is you're taking, the dollars that you work for and you're purchasing an asset, right? That is typically like take, Ethereum, for instance. Ethereum is a network, right? It's decentralized computer, for lack of a better explanation right now. Okay. And so people run what's called smart contracts on them. They mint NFTs on the Ethereum blockchain. So there's a lot of different reasons to buy these different altcoins that, we can get into later. But the reason people do it for the most part is the return on these altcoins over these cycles has been much higher, uh, you know, than you would have you just bought Bitcoin. Okay. And so, and I want to be really careful here because this is something that, we can talk about in depth and how to do this. But this is where a lot of people get really, really hurt when they try to do this because they don't understand the market cycles, right? And we can talk about, is the 4-year cycle going to last? Is it going to be the same? I'm of the opinion that it's a 4-year cycle until it isn't. Okay. So, but people want to get in here and they don't want to do the time to do the research and the work, whatever the latest, meme coin is, Dogecoin or whatever. So there's a layer. What I'm trying to get to here is there's layers that are involved, understanding which of these projects are real, which of them are trying to build real world products that serve real world people. Okay. And then there's a bunch of them that are complete and total shit, like that you wouldn't want to touch with a 10-foot pole. And
Mm-hmm.
so, before you get into this, you have to understand that there is a learning curve involved in this. You aren't just throwing money at the wall and saying, God, I hope this works, right? There is some thought behind this, and there's some strategies around how to pick some of these. And what the strategy too is Bitcoin plus altcoins. This isn't trading, right? This isn't sitting here and saying, I'm gonna buy a $10,000 worth of Dogecoin and then sell it 2 weeks later for 15,000. Okay. This is doing the research, understanding. We'll give you the research tools that we use. Meserize one, Stansberry Research is one. You can follow what a lot of the venture funds are doing. They've got great research pieces that they put out for free that you can research, right? So, uh, the point being is that, like, yeah, so you can use Messerai and you can go in and read about which cryptos are which ones are trying to tackle which problems, right? But again, it's important to understand very high risk. And so what you want to do with this is, like I said, my strategy is 80 to 85% Bitcoin long-term holdings. And I'll take 15 to 20% of my crypto investable portfolio and I will speculate on some venture plays. All right. And so when I say venture, what I mean is 2 to 5 year investments. I will watch these projects. I will wait for the bull market to end. I will try to enter Ethereum under $1,000. Okay. I will try to time these as best I can to markets. Right. And I don't always get it right. That's the other thing you have to remember with this game. You are going to lose. Like, there's nobody that does this that wins every bet they make. They just don't, right? And that's venture investing in general. And what's exciting about cryptocurrency is it allows the average person, me and you, to be able to go out and be a venture investor. Before this, you couldn't get access to venture plays, right? You had to invest in a fund, you had to be an accredited investor. And while all of that is well and fine, what does that do for the normal person, right? Like, I may or may not be an accredited investor, right? But that doesn't mean I don't know what I'm doing. There's a lot of really, really smart people that want to invest that just don't have 250 grand or whatever the requirements are for being an accredited investor. So crypto allows the normal person to get in there and try to, play the game, right? And that's what you're doing. Like, that's not like make any doubts about it. I mean, you're venture investing, right? And so that second strategy is also a very long time frame. These things play out and have according to the cycle. So, when Bitcoin does these blow off tops after the halving cycles, these altcoins tend to perform relatively well. And so at that point, what you do is you exit your position into fiat dollars. The other thing this does is it allows me to never sell Bitcoin. Okay. So if I am in the crypto game, in the Bitcoin game, and my goal is to accumulate as much Bitcoin as I can, I will use altcoins to do that because I will use the relative strength to altcoins in these markets to acquire more USD that I'll use to acquire more Bitcoin. And that helps me with the first strategy, the 80 to 85% of Bitcoin that I never sell. That's how I acquire more Bitcoin using crypto. All right. And I think that's what's important for people to understand. Again, why are you doing this? For me, I want more Bitcoin. Okay. And so I'll use altcoins to do that. You may want to increase your cash. And so you can use altcoins to do that too. And so there's a lot of talk in the industry, like, Bitcoin people hate everything else that isn't Bitcoin. Some of them do, rational ones understand, right? Like, but what you got to figure out is, why are you doing this and why does it matter to you? Are you willing to take, 5 grand and lose it if you're investing, and that's what Ted talked about earlier. Don't put yourself in a position where you can't pay your bills. And the thing with the crypto stuff is, you don't need to take huge bets to make really, really good money. Okay. And so don't feel like you've missed the party or missed the boat. If stuff starts going crazy, it always comes back down. These markets are so new. There's, the market cap of the entire crypto space is it at $1 trillion?
Mm-hmm.
I think Apple's worth more than the entire crypto market. Okay. So you're still early. There's still plenty of time to figure this out. Don't feel like you have to rush in. And I just want to be really careful with this strategy, because you got to understand that you're taking massive risks. So if you've got a family, if you've got obligations, like, be careful with this stuff. I would say that's why, like, we keep saying the first thing you should do is just buy Bitcoin. If you want to get in the game and you're just starting out, just buy Bitcoin for 3 months and do everything you can to learn everything you possibly can about these markets and about how it works. But just buying Bitcoin is enough. You don't have to mess with all this other stuff. Now, if you want to, great. Like, we're not here to tell you not to. I mean, we'll help you do it, right? We'll give you strategies and, you know, kind of point you in the right direction of research so you can find projects that make sense to you. I can tell you some of the stuff that I'm invested in that, I believe in, but, you have to do your own research. It doesn't work if you don't do your own research. Trust me, I've tried blindly to copy trade people. I've tried to just follow other people's investments. Like, for some reason, the universe won't allow that to work. You have to put in the work yourself. But I'll wrap it up there, Ted. I feel like I was rambling for a little bit, but does
No,
that
no,
make sense? Do you have
that's
any?
good. I
Do you have
do,
any?
and
Yeah.
it wasn't really. I wouldn't call it rambling. I mean, I would say that you touched on some very interesting points that uh, I would encourage or just reiterate is simply that the opportunity. There's two things. There's the opportunity for the every person that didn't exist, 10 years ago, basically, which is if you let's there's another like strong component to what you said is that there are a lot of smart people in the world that are not financial advisors, didn't go to school to become, they didn't study finance necessarily with the intent of having a career in the financial world and then getting all of the necessary credentials like becoming a certified financial analyst or certified financial planner or certified this or certified that, which the thing I'm trying to illustrate here is that in order for them to participate in the market and be able to benefit from the opportunity, you would have to do all of these things and get all these certifications in the past. It kept a lot of people out of the game just by default. I mean, 15 years ago, if I had wanted to participate in markets like the crypto markets to give myself the opportunity to benefit financially, swing the bat, take the, take necessary and calculated risk in the market, it wouldn't have been possible. So really, to drive home the point is that from a venture perspective of people being able to take very smart people, like everyday people, can now go to the market and say, I want to participate in this particular project. Let's say it's Ethereum. Let's say that I really believe in Ethereum and I understand it and I don't care what the price is because I believe that the utility and the benefit to humanity is important and I want to support that and I want to take advantage of the price appreciation and depreciation cycles that occur. And if you look on the chart, this chart here, you can see there are definitely very strong moves up and down in terms of price. But if you're as you start, let's say you get into the game, you buy and hold some Bitcoin, and then you start to you start to peel back the layers on other things, and you learn about these projects and learn about the economic opportunities that they can create. You can then become a venture investor in many capacities without having to go down this like educational path or this other path where you're, if you have a family and you're in a particular career that you love, or you're doing something that basically it would be disruptive to go down this other path and have to get all these certifications just to do something like buy Bitcoin. It would be completely ridiculous. And so I think that that's a really strong point, and it lets the crypto markets have opened up the galaxy of being able to put your money to work and take calculated risk and participate in the financial system in a new and exciting way that is not going away. One, two, creates all kinds of opportunities for people, not just here in the U.S. but around the world. And three, it can help people supplement their incomes and create like economic harmony in many cases where otherwise we wouldn't have the opportunity. So
Yeah.
that's what I was formulating in my mind, listening to you articulate the different points. But it's really at the beginning, it's just trying to get your mind around the fact that we now have this opportunity, and it for for the average person, it can be very exciting.
Yeah, and I think that's important to understand too. I mean, you're the other thing with this stuff is traditional venture investing. You're locking up money for 5 to 10 years. You have no control over it. With this, you're buying tokens that you can sell 24 hours a day, 7 days a week. So there's all kinds of aspects to this that we can help you kind of understand and get into. Uh, but it's important to remember, like strategy one is buy a whole Bitcoin. Strategy two is Bitcoin plus what we'll call venture bets, and there look, you could use a different word. It doesn't have to be venture investing, but that's what I relate it to. And these, again, remember that like when you do this, the time frame on this stuff is 2 to 5 years. You gotta ride this out, and you're gonna go through 80 or 90% drops at some point. Now you don't have to do that, right? Like the goal is to this is another thing I can help you with too, as we get into this. And this is going to sound crazy. Sometimes the hardest thing you'll ever do is sell. Okay. And this is a psychology thing. This is, you've got something that you've acquired for 2 years, right? You spent 2 years building a position in XYZ coin. All right. And it goes up 500%, 1,000%, and you're staring at a chart and you're going, this is going to go up forever. I am now euphoric in this moment, right? Like, the hardest thing you're going to have to do is hit the sell button because, and trust the way I know that is because I've held some of this stuff 80% down through 2 cycles. Now, not all of it. I did learn after the first one, but, you want to set targets on the way up to sell and take profit. Okay. That's one strategy. But you just got to remember that, these markets are volatile. And so when you get that huge appreciation, you've got to go into, you know, fiat and cash or whatever, the currencies at the time. Hopefully it's not, US CBDC, but strategy one, buy and hold Bitcoin. Strategy two, venture invest 2 to 5 year time frames. You can look at the Bitcoin halving cycle as kind of a guide to, when you want to start taking profit. Uh, And then strategy three, which is totally different than both of those strategies, and I'll let Ted take the reins here, is trading for income. So strategies one and two are long-term strategies to grow your wealth using Bitcoin and other crypto assets. And strategy three is simply trading these assets on a day-to-day or week-to-week basis to and Ted, what I like about this is it's a way for people that are in crypto full time to learn how to generate an income while they're waiting for the market to kind of turn around. Okay, and so for normal people, trading is something that takes a very long time to learn. Be patient with this. There's a lot to learn. It might sound like foreign language. Uh, it is a foreign language. Okay, it's something that very few people are successful at, and there's a reason why very few people are successful at. And we can help you understand the rules on how to survive and learn and not blow yourself up trading. That's what we're going to try to help you do. And there's a lot of there's some ways to do this that Ted can go into in detail later. But Ted, if you want to give them the general overview
Sure.
of trading as kind of the third strategy here, that'd be great.
Yeah, and I'll preface the trading talk is that you really need to. There's a couple things to keep in mind before you consider trading. And when I say trading, I mean looking at a price chart like this. XRP is a good example of an instrument that had some initial interest back in 2017. It went from basically 3 cents over here when people really got interested, and it went all the way up to $2 and or almost three. That's like $2.70 very quickly. And what I'm trying to communicate here is that if there's ways to take your fiat money like US dollars and take a look at an instrument like XRP and decide if you want to buy it, and if you want to buy it for, let's say, a day or a week, and before you make your decision about entering the position, you look at the chart and say, well, today it's worth 38 cents. Isn't this Masari interface is not the greatest, so I'm going to go over to tradingview.com. And just another thing to remember is that like this, when I talk about trading, I'm not giving anyone advice that they need to buy or sell a certain position ever. What I'm trying to showcase here is that trading is an approach to putting money to work in the market, and the idea is that by putting money into the work or putting money to work in the market, you're able to earn a return on a very short term basis, and you're not necessarily concerned with holding the asset for a 3 to 5 year period or a 1 to 3 year period or any period really. What you're looking at here and trying to understand is that market participants from around the world decided that at various times this particular asset, I'm not really interested or not interested in XRP. What I'm interested in is the chart. And I see that there were periods, you could call these cycles perhaps, that people got interested in this and price started to move higher because people were making what I call a speculative bet. They were speculating that at this price, 20 cents, it's a good opportunity to buy some and see if the interest that is developing in the world, whether it's in the media or if it's in like communities that are interested in these things. There's many different vectors, I'll call them, where people take an interest in a particular crypto asset like this. But what I'm trying to communicate simply is that, and this is a monthly time frame. I'm going to back it out to a weekly, and you can see that over the course of several weeks, going all the way back to 2018, there were people that started buying this asset and the price started going up because there were more buyers than there were people selling it. So there's concepts to start to internalize, and one of them is supply and demand, and another one is the perception and whether or not people think that this is a worthwhile speculative investment. And the thing I'm trying to also demonstrate here is that you can look at history and see that the chart behaved a certain way. The price went way up here to $3. And actually, on this chart, it says that we peaked at $3.31, and I have to share that one of the hardest things that Josh talked about a moment ago about one of the hardest things to do is sell is because I did have a small position at 25 cents in. Again, I was working at a trading desk supporting commodities futures traders at the time, and we were interested in crypto. And I had a small position at about 25 cents, and it ran because there was all of this speculative interest all of a sudden at this time, and it ran all the way up to $3 and some change, and I didn't sell any until it came back to $1.50. So I didn't know where it was going to stop, but this is part of like the trading mindset is that you're buying a position in an asset with the understanding that you want to sell it at a higher price to either profit, or if let's say that in 2021 in February you saw this price at $1.50 and you thought, okay, if I look at the chart, it went to $3 and some before. If we're in another cycle, somebody might call a bull cycle, or a cycle where people are willing to take the risk to buy this in the hopes that the price will appreciate. I'm going to buy it at $1.50, and it might go up. It could go up as high as, say, $2.78. Just and what I'm illustrating here is that if I were to enter this trade and not knowing that it was going to go lower, I would say my profit target is somewhere in the 270s, maybe $3 range, because the chart demonstrated that the market at one point in the past was willing to do that. Remember, past performance does never guarantee future results, but this is more of a mindset than anything else, is that if I enter the trade at $1.50 and it goes higher, great. But what happens if I entered at $1.50 and all of a sudden something changes? The greatest number of market participants decide that this is not worth their time anymore, and the price drops back to $1.10. I've now lost some principal value in the US dollars that I bought this particular instrument for. It's not worth $1.50, it's only worth $1.08 now, for example. You're at a point where you can decide, do I wait this out, or do I sell this position, take the small loss, and then find another instrument? And what I'm trying to communicate here is that the name of this game in trading is simply you're approaching the market. Oh goodness, the trading view here is, I'm using the free version of trading view right now in this other browser, but let's suffice it to say that what we're trying to communicate, and I don't know how to get this to go away, so we'll go back over to this chart. What I'm trying to say here is that this is purely a speculative approach to prices for different crypto assets. These charts might look similar to stock charts if you've ever looked at stock charts, but it's basically, there's an instrument, there's an open market for it. There are market participants that believe the price is going to go higher. There are some that believe it's going to go lower, and the market participants buy and sell at various intervals 24 hours a day now, and the price is a reflection of what the market thinks the asset is worth. So looking back at this XRP chart, you might be able to determine that in the past, when XRP was trading at 20 to 30 cents each, that this is just purely speculation and a hypothesis, is that in the past, when it was trading at these levels, it was worth considering buying it at 30 cents because the next wave of interest was going to come along. You don't know ahead of time, but there's this concept of risk reward, or being able to calculate very simply. I mean, anybody can do this. If you know any basic arithmetic, you can look at this and say, if I buy it at this price and it goes down 10%, from say 37 cents to 27 cents, and I decide that I'm going to cut my loss and exit this position and only lose what we would call 1 unit of risk worth of my trading capital. Let's say it's $20 I'm willing to lose on a single trade. If the price comes back down and I exit my position and only lose $20, I can then still have some trading capital left over and say, okay, that trade didn't work, but let's reevaluate now based on what's happening in the market. Or, and what I'm trying to communicate there is that if you took a position, say 37 cents or 38 cents, and the market were to come back, say 5%, and you got out, that's a small amount of risk to take, financial risk that is. What I'm trying to communicate on the other side of that is the reward potential, is that if I buy it at 38 cents and the next wave of interest comes along and it rises up to $1.50, you could say, well, my risk reward ratio is that if it goes back down to say 25 cents, but has the potential to run, based on what the chart is telling us, to go back up to $1.50, you could do the math and say that for every $20 that I was willing to lose, I might make 4 units of profit. So that 4-to-1 profit potential would be considered a healthy or good risk reward ratio when you're looking at charts. And remember, this is all in the context of short-term trading, meaning I'm going to speculate based on what I think I know and what I think I know how to interpret by looking at this chart, understanding that there's no guarantee, I may buy, let's say, I don't know, $1,000 worth of XRP today, and if it make a decision ahead of time, if it comes back 5%, that means that the market is just not ready to go higher. So I will exit that position, wait for the price action to do something different, and maybe do what maybe it will set up differently. And there's a whole other can of worms here is when looking at charts and understanding what these green and red lines mean. This particular chart type is what's called a candlestick chart, and it's a way to try and understand like what the overall market sentiment was at various times in the past. But without getting down into the weeds of trying to explain what candle charts mean, it really at the end of the day, what I'm trying to communicate more than anything else is that if you look at a chart and an instrument is trading at a price that looks like it's discounted, perhaps is one way to talk about it, or it looks like it's overpriced, you can put on what's called a speculative position or a trade, a short-term trade, to benefit from price differential, meaning the price may go up, it may go down. This is what some might call the volatility of an instrument. You can see that XRP has been somewhat volatile in the past, where it went way up and came way back down. That I like a roller coaster, go way up, come back down.
No, yeah, I think that's good. I think that, without getting into a whole trading course, I think that kind of gets the idea across. Like, I think you did a good job explaining
Thanks.
that. Yeah, no. I think so. Generally, we're coming up about an hour here, so let's kind of
Yeah.
recap here on what we talked about today. So the way we look at this and the way we're going to talk about this over, the coming weeks and months is there's essentially three strategies that you can use to get into this cryptocurrency world. The first is to buy and hold Bitcoin. The second is to use altcoins as kind of a venture investment over a 6 month to 5 year time frame, and then to grow your Bitcoin exposure, increase your net worth. Or strategy three is trading, which is a short term strategy to look at the market, see where it is today, and try to generate income from trading. And so we'll go in depth on all three of those strategies as we go forward. But I think that basically sums up what we wanted to talk about today.
Yeah. One last thing, just remember, when you take any sort of risk in the market, your money is at risk. So I want to encourage everyone to think about what your appetite for risk is. Everyone's risk appetite is different. Just understand that what we're sharing here today is just our thoughts and feelings and opinions. It's not advice in any capacity, especially not financial advice. So what I'm hoping that comes out of this for anyone who watches this, either to now or in the future, is that there's plenty of opportunity, and the first thing to do is just start developing a understanding of what these things are. You don't have to know everything today to participate. You can participate with as little as $10, in some cases less, but perhaps you find it within yourself that you want to know what it's like to buy and hold some Bitcoin or some other crypto asset. Encourage you to take a look at what the market has to offer in terms of exchanges, which are the exchanges where you can buy and sell, and that's the place to begin. And I just want to encourage everyone to keep learning and ask questions, and we'll do our best to try and help everyone along the way, no matter where you are in your journey. So with that, I'll say thank you very much for joining. And Josh, thanks very much for sharing your perspective on the venture side of things, especially because that's something that's where I have a lot to learn. So thank you for that, and we'll